Hey guys, and welcome. Those concepts there, I will do a separate video for them. Okay, so I want to jump straight to question 1.2, which is Violet Stars. We are doing reconciliation. They say the information was extracted from the records of the business for April 2023. Violet uses the official bank statement, which is available on the 25th of each month, meaning that transactions after the 25th are most likely not to be on the bank statement, so then you will have to update them on the bank reconciliation statement. Then, but she also uses her EFT transaction records renumbered to complete the cash payments journal. So you are required to update the totals for the cash receipts journal and the cash payments journal for April 2023. Use the table provided in the answer book. Those are the tables that are provided, or the table rather. Then we are given information. The first information that is given to us is the bank reconciliation statement. Last month, the 31 March 2023. We have to check from last month's bank reconciliation statement what needs to be fixed, what was fixed, and how can we, or what did we miss as the business. So they say the outstanding deposit on 18 March appeared on the April 2023 bank statement. It's this one. We scratch it out. Then they say the deposit on 28 March 2023, which is this one here for 37,200, appeared as 22,200, meaning on the bank statement. An investigation revealed that the cashier has disappeared with the outstanding amount. It was decided to write off the outstanding amount. So this one, it was a deposit, meaning money, we received it as, we recorded it as money received, which is the cash. It was recorded in the cash receipts journal. So now that we cannot trace the other amount, meaning that we lose it, we have to write it off. You write it off by minusing it in the cash payments journal. Therefore, you are going to calculate the difference between 37,200 and 22,200 to get the difference. I think the difference is going to be 15,000 rands. Let me confirm. Okay, it's correct. So you're going to your cash payments journal. You're going to say 15,000. Remember, you don't have to write minus 15,000 because already the cash payments journal, we know that it's a minus. The cash receipts journal, we know that it's a plus. So you don't have to do that. Now they say also that both the EFTs were on the April bank statement, meaning we are done with this one, we scratch it out, we are done, this one it appeared, this one it appeared. Then from your last month's bank reconciliation statement, there is an item there I'll try to highlight in blue. They say favorable balance as per bank account, meaning this was our closing balance for last month, therefore it will be the opening for this month. So you write it opening bank balance. Please note this amount, you're going to need it when you calculate the correct bank account balance, this one. So since it's favorable, it means it's a plus. Okay, now I'm moving to the provisional totals. They already put them there for you. You always have to put these. You see on the cash receipts journal it's there, on the cash payments journal it's there. If they didn't put them for you, these are the amounts that you were supposed to start with them as totals before you can fix anything. Then information on the April bank statement, none of these items appeared in the April cash journals. So since it's on the bank statement and not in the cash journals, we need to update our cash journals. We have a debit order to Brylet municipality. Obviously a debit order, it means you are paying rates, so it's cash payments journal, CPJ. We have cash handling fees, CPJ. Deposit, CRJ. Deposit again, CRJ. Cash withdrawal, CPJ. Investment matured, it means we were getting the money, CRJ. EFT transaction, CPJ. However, if you note at the transaction fees, they are appearing twice, so it's a duplicate. It is most likely that the ones that here, the transaction under additional information, they say the EFT transactions, which are those ones, they were duplicated on the bank statement in error. So it means we are only going to update our journals with one, this one. Then this one, we are going to use it for the bank reconciliation statement. Since it was deducted, meaning they minused it, we are going to tell them to rectify it by doing what? By adding it. So now I'm going to update the cash journals as per those things that I wrote on the side to save time. But now, before we start, we need to check at the additional information as well before we can update everything. They say the debit order to Brylet municipality was for water and electricity. Then it means we have to update. G Marigold, the tenant deposited the monthly rent. I think, where is the monthly rent? Oh shit. And then the deposit from Bentley microloans did not relate to the business. It's not for the business. The bank was informed of this error. This 65,000, then you cannot put it in your CRJ. It means it's for the bank reconciliation statement. They added it by mistake, so they need to take it out. The cash withdrawal of 640 was for fuel for the owner's vehicle there, okay. Then the EFT transaction fees were duplicated on the bank statement in error. You can see them twice, so we are only going to use one. Now let me update quickly without wasting time. Then now they say the cash journals reflected the following entries. So these entries are on the cash journals. They are included here, but that did not appear on the April bank statement. We have a deposit of 22,500, which is a plus, and EFT, 2 EFTs, which are minus. Then the bank statement balance, it's unknown. Okay, then it means now I can calculate the totals for the cash journals and start with the bank reconciliation. They say now you need to calculate the correct bank account balance on 30 April 2023. Now for you to calculate this, you're going to say the opening balance plus the total for the cash receipts journal. It's going to be like this. That is the formula. So, the opening balance, remember I said that on last month's bank reconciliation statement, there is that favorable balance as per bank account. It's going to be your opening bank balance. It's favorable, meaning it's positive. It's 49,720 plus your cash receipts journal total. There it is on the table, 142,300. Then you minus your payments of 222,000. Then now let's calculate our total. It is giving me negative, which I'm writing in brackets, 29,980. Then now we can do our bank reconciliation statement. Now there are items on cash journals on information E, but that did not appear on the bank statement. So the format of our bank reconciliation statement, I'm going to write it down. It should start with the balance as per the bank statement, which is unknown. And then I'm going to use the 2-column method, and then after that I will erase and use the 1-column method for those who are comfortable with that. So for our debit, according to the bank reconciliation statement, remember we're preparing it from the point of view of the bank. So the bank sees the business's bank account as a liability, meaning that when the money increases in the bank, it's recorded on the credit side, and when it decreases on the debit side. Therefore our debit is a minus and our credit is going to be a plus. So we do not know how much is this amount. I will temporarily put question marks there. Then after that we have outstanding deposits. So now since the deposit is a money in, I'm putting it on the credit side. And then for our outstanding EFTs, I'm going to write them on the debit side because those are payments, so it's money out. So the first outstanding EFT is number 883 for 9,520. Then the other one is 884 for 12,530 for repairs and buildings. Then now also remember there is an amount I said write it as BRS there on the information on the bank statement, which it was a deposit Bentley microloans 65,000. They said that we need to inform the bank about that transaction because it's not ours, right? So since it was deposited, which is a positive, when they rectify it, they should do it as an opposite journal entry. So since it was added, when you rectify or correct the mistake, you're going to minus. So we're going to say correction of error, and then we recorded on the debit side as 65,000. And then now also here I forgot to write that BRS. There's transaction fees which are duplicated, so they were recorded twice on the bank statement. We need to tell them to take the other EFT transaction fees out. So since they were deducted, meaning they were minused, it is a debit, then now we need, if they are rectifying it, they need to rectify it on the opposite journal, which is the credit side. Right, let me write it down. So now since we are using the 2-column method, we are going to have an item here as balance as per bank account. Balance as per bank account. So your balance as per bank account, you are going to take it as the correct bank account balance. This balance that you calculated on 1.2.2, it's supposed to be your balance as per bank account. So since it's a negative, meaning it's credit, because remember, according to the business, let me use a different pen. Okay, let me just write it here. According to the business, the bank account is an asset, and assets increase on the debit side and decrease on the credit side. So if it's a negative, it means it's a credit balance. Then you have to record it under credit here. So it's going to be, since it's a credit here, even here you record it on the credit side. So it's going to be 29,980. Then you are going to calculate the bigger side. I mean, you're going to calculate both sides and check which side is bigger, and then total with the bigger amount. Let me do that. So the total for the debit side, I'm going to write it down here. It's 28,550. And the total for the credit side is 52,840. So the bigger side is the credit side, which is 52,840. Then we are going to write it on both totals. Then now that we are done, we are going to look for the smaller side, which is the debit side. Then it means that's where we have to update the balance as per bank statement. Then we are going to use what we call the bottom up method. You are calculating from the total going up. Then when you are doing that, you are going to change the signs. Where there is, wait, no, yes, where there is a negative, you put a positive. So since from here, everything here it's supposed to be negative, or you don't even have to change the signs. In this case, you can just take the total and minus everything. Then I am getting, because this one is a 2-column method, so you just take the total and minus everything. Then I'm getting a total of 34, negative 34,210. Then you write it as positive. Then it means that you are done, and everything should now look something like this. And yeah guys, we have reached the end of the video. It should be looking like this. So I didn't update those items there on 1.1. Let's finish off this video with that. We are going to check 1.1. Say indicate whether the following statements are true or false. Write only true or false next to the question numbers in the answer book. A credit balance on the bank statement means that the business has a positive balance in the bank. Remember, we said as per the bank statement, it's a liability. So a positive, it's credit, a negative, it's a debit. So this is true. Sorry. And then it says a debit card may be used to withdraw cash from an ATM. That is true, because remember, a debit card, it means it's your normal bank card. You just have the barking debit card thing, so you can withdraw or you can overspend on it. So the money is just transferred to your bank balance, so you don't need an additional account, I mean card. And then a bank overdraft, it means that you've used more than what you have it's the debit card thing, so it's a negative. It means you are on a negative balance. And then it's a short-term loan that is transferred into the business current bank account. That is true. And yeah guys, this is all that I wanted to do in this video. I hope now the bank reconciliation statement, it's more understandable. See you on the next one.